Okay, hey guys, we're back again and we are here with chapter 3. If you've not seen chapter 1 and chapter 2, kindly do so because whatever we're going to have starting from here going forward is going to be a follow-up from the previous chapters. Okay, so what is Forex trading? Yadlala. Intermediate traders. We won't start with what trading is, but for real though, what is Forex? 5, 4, 3, 2, 1. Yeah, you definitely got that wrong, but we'll try again. On chapter 3, we're going to dive more as intermediate traders about what Forex trading is. Forex trading is the involvement of buying and selling of the assets with the speculation that the market will either rise or fall in terms of the asset you'd be trading at the time. It is the most liquid industry and it is worth $2 trillion per day. Like, that's how much money there is in this field. All right. So as I promised the last time, the first thing we are going to talk about is market structure. What is market structure? You've seen the candles and you've seen patterns, but you must still be wondering, what is this market structure, or what is market structure made of? That is pretty simple. First of all, we'll just do a quick run back to the previous chapter to see if you still remember the formation of candles. First things first, a candle, we've got a bullish and a bearish candle. A bullish candle has got an opening at the bottom. It has a closing at the top. It has a body. It has a wick. It doesn't matter the color. I'll just rephrase on that. It doesn't matter the color because it's up to you what color you want your candles to be, honestly. And then we are going to go on to the bearish one. It's pretty much an opposite of it. And I'm just going through this because we already went through it on chapter 2. I'm just trying to just touch base on it and then we can start on the market structure. First things first, when you are going to a market and for you to understand what the market structure is, we have 3 key factors that you need to keep in place. 1, identify key areas. 2, validate your entry. And 3, make that money and enter the trade, right? So how do we identify key areas in the market? I will be doing this by a show of diagrams, so you will not be seeing my face, but you will be looking at the diagrams and how you can identify key areas in a trade. That is our first step. All right. So as you can see on the diagram in front of us on a 15-minute chart, you will look for support and resistance. This is one of the ways in which we identify key areas. Okay. So support and resistance is simply a demand level where the momentum is big. That is where we have the support level. And then at the top, which is at supply level, that is where the resistance is made. Literally at these points in the charts, that is where the traders, or according to the pattern of the candles, that is where there is respect of that particular price range in the market price. All right, let me just make like a literal example, a literal one. So you go into your chart and you're trying to see, okay, what am I doing here? What is this? So when you go to your chart, what you look at is that at the top here, which is where the market normally turns back down. When it gets to this level, it doesn't go up or higher. It just comes and stops and goes back down, which is what we call in this case rejection. That is the resistance level. That is where the price isn't going any higher. And then at the bottom here, this will be your support, meaning where you're stepping your feet, where you've got your bodily support. That's where you are having your support level. Okay, so this is where you identify your key areas when you are going to go into a trade, because this is where we have zones that we will later figure out or discuss in the chapters, whereby you have a supply zone and a demand zone, which is where you get to know whether you take a trade here or you don't take a trade, and what trade is it, what trend is that, is it at a support level that you take a supply or a demand trade. We are still going to dive into that. Okay, so another one that we have here on the diagrams that I'm showing you on the 15-minute chart again, we are showing you that at the support level or at the resistance level, it is when the price comes up to an area and moves away. So at the resistance, the price comes up and moves away. At a support level, the price goes down and moves away. There's respect in the market for that particular price range. Okay, and then on the following step of identifying key areas, then now we've got candles. Remember, I already told you in the previous chapters, as I said, if you've not watched those, please go back and watch them, because now we're doing a follow-up on the types of candles that are here for us to be able to identify these key areas in your trading chart. All right, so let's say as you're looking at the diagram right in front of us, we are going to be looking at support levels. So it's going to start off coming from a supply, and then when it gets to the bottom of the chart, which is where the market makes a reversal, that is where our support is, where it keeps on going back. And for you to know what this key level is, as you can see, you can check on the green candle that is appearing in front of us, which has got a long stick, which I mentioned that we call them a wick or wicks. A wick, if it's long, it means that there's a big rejection. Let's say the market is going up and then there's a longer wick from the top going all the way to the down where going down to where the price ended. Then that means that there's a rejection. The longer the wick, the bigger the rejection. It's just vice versa with supply. All right, so you know that at this support level, this is where you could look at saying that this key area is likely to give you a great trade. And well, in this case, because it's support, we are talking about a great trade in terms of a demand zone, in terms of a buy trade. All right, so as we are continuing to identify key areas, we are now looking at a demand or a resistance chart. All right, so we have here, as I said, if you remember, I had mentioned that you mustn't really look into the colors of the candles much, because what happens there is that I can choose to make my red candles the buying ones, the bullish ones, the demand ones, and then the ones that are going up, and then decide to make the ones that are going down green. So that really depends on the person. Hence, you need to have a proper understanding of the market direction. Now we are looking at our demand zone as we are continuing from where we had our support. So if you look at that, it went all the way up. The market went all the way up from where the support first started, but then it got to a rejection. If you see, we're going to cover this in the next chapter. The market had its own higher highs and higher lows when it was doing that trend in the market that led it all the way up to that point of resistance where we now see an engulfing candle movement. In my case, however, I'd like to make it known that the red candles, which is mostly or most of us, the red candles are the bearish ones, and then the green ones are the bullish ones. So the market was on an uptrend, and then when it got to that level, it started off with a bit of rejection because the candles didn't have as much momentum on a bullish trend. But it got to a point whereby the bearish or the sellers got in and pushed the price down. Hence, we see the engulfing candle being like has more momentum and being bigger, and then the candles that follow after that, they make a pattern of a downtrend, meaning that these people have pushed the price down, and hence it makes that particular point in the chart the resistance level. It's resisting. It's like, nope, beyond this point you can never go anywhere. So can you now tell me, when you look at the charts, if you know which one is a resistance, which one is a support? If not, if you want to look at resistance, just look up at the roof. If you want to look at support, look at where you're sitting, where you're standing. Your bottom is always where the market is called the support, which is where you're getting your support as well right now. Okay, so because you just kind of seemed like you understand where we are going, I'm going to open this first chart. Looking at that, do you know which one is the support? Just show me the support. I'm going to give you at least 5 seconds. So we're going to go 5, 4, 3, 2, 1. And did you get it? All right. So I'm now going to show you on the following chart where you can see visibly and vividly based on where you chose to choose your resistance points and support points in the previous one. On this next one, you can just clearly see that our first point of the structure, our first point of the market pattern, candle pattern that we are seeing, it has a very high peak stemming straight from where we had the reversal of the current bullish market right at the beginning of the screen to your left. We can see that this is where the market had a reversal, meaning that even in the previous moves by the market,